The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look. By the way, folks, this is a big anniversary date. This was the top of the stock market in 1929 on September the 3rd. The Dow was trading at 383. And just a few years later, in July of 1932, it was trading in the low 40s. I believe 41, as I recall Basil telling us. Anyway, it might have been 42. It's neither. Anyway, let's move on to, if you want a great book that understands what happened during that time, there's a book called Only Yesterday. Just a fabulous little book. I bought it for a dime at a bookstore once, a paperback. It's one of my favorites. But at that time, we had 2,100 automobile companies at that time. And if you remember, we were just learning about electricity, refrigeration, elevators, all that stuff. And of course, that 3 years led to the Great Depression that didn't end until the big war, World War II. Okay, silver just made a new high here, folks, up here at the 1880 level. The open interest has been dropping dramatically in silver and in gold, so I don't believe this breakout in silver is a new move of any kind. But maybe this time the open interest won't even count, or maybe it'll just keep dropping while it goes another dollar. We'll see. Gold is $20 under its high at 1544. So that's neither here nor there. A couple of big things happening, folks. The main chart that I posted this morning was the dollar index. I want to post this again so that we can talk about this. There it goes. Basil's telling me it traded at 40.56 on July the 8th. So thanks, Basil. Appreciate that. I knew it was down around 41 sometime, but that was before my time. Let's move up here and take a look at the where we are in the U.S. dollar index, folks. You'll notice here that I posted the first chart was the daily chart. Now I posted the weekly chart. That's the importance of this number of 99 change, 99.30, 99.40 is what we're looking at right now. That equates to that move down in the euro that we've been talking about for, a long time. Let's just get that euro up here so you can take a quick look at it. And you'll see we got down to that. In fact, we went just a tiny bit below the 1.27. We got down to 109.28, and that's when the dollar index hit its peak. So that, whether it means anything here, and I don't know, but that is a small butterfly pattern based over the past month's action. And they're talking about it now, about how how everything is bad in Europe, and Brexit is bad, and everything's bad. I mean, there's no positive people out there anymore at all. I don't know where they are. They'll come around, don't worry. All right, one of the questions that something asked me was about the stock market. We'll just take a look at what happened last week. If you remember, we were looking at this big ABCD pattern. In the S&P, we went up and we took out the highs of August, way back on August the 5th. Let's check that again. In July. We took that out by 2 cents. We did not take it out in the NASDAQ. We did not take it out in the Russell, the banking index, the transportations. It was just done by the Dow Jones and the S&P 500. The New York, the composite NASDAQ did not do it. We broke down to the 382 level on the holiday. Yesterday, we rallied up to exactly the 61% retracement. Later, we came down and we took out that 382 retracement overnight as the S&P was down about 30 handles. I'll bring this up so you can take a look at what that action looked like, because it was really quite interesting, the fact that it was supposed to be a holiday, and it people were still in there trading. You'll notice that the September 1st, which was the Sunday, we made a bottom down there below the 382 that we had before. That came in at the 905 level. Now, if you notice the two little lines, and you have a perfect ABCD exactly at the 61% retracement, that leads us to the spot that we should be going down to the 28 to 70 level in the next day or two. Now, if we clear 29.36 today, then this is all wrong, and we're going to be probably going up forever and a day. So that's neither here nor there. Here's something that's interesting that Rich Anderson sent us, and this is something I'm going to start looking at each week, and this is the number of the moves that we've seen this past week in some of these markets. And you'll notice the big move this past week, we're in hogs on the upside, wheat on the downside, also natural gas, which we've been very friendly to for quite some time, is doing pretty good. So anyway, whenever you see extremes like that, you want to take a look to see, what these chart patterns look like. The commodities are very, very important in here, folks, because if this stuff, if we start seeing massive deflation, this is not going to be good for the stock markets. I can tell you that. And the simple reason for that is the old supply demand. If people are not buying when there's a lot of demand out there, when there's no demand out there, that means they don't have any money, and that's a bad sign. So we have a beautiful three-drive pattern in the commodity index, much like we had the three-drive to a top when it was back there last May. So that's where they should had a nice move to the upside, which is good to see it starting. So it's important that we stay above that 370 level in that Commodity Research Bureau index. So that's been what's been going on. We'll see what's been happening here over with some of these other markets that we're following closely. But that's what we're watching in the stock market today. If you have any questions, Tim Bost will be our guest at the half hour, and he's always interesting to see. I did want to share with you the one thing that I thought was very, very interesting this week from the commodity standpoint. I'm going to post this into the room so you folks can see it, because to me it goes back, has a lot of history to it, and that is it comes from Bloomberg, but it's about Bunge Grain Company, and this is this thing has been around for 201 years. It's a commodity trading giant, and it's really, and I've done business with them forever, and they're cutting back dramatically, which is really, really surprising to me. Bunge says they're responding to bumper crops that curb margins and reduce the volatility of traders need to thrive on. He said in July, Bunge posted better than expected earnings, and that was because of its invested in Beyond Meat. And so it's running into some serious problems here, folks. So this might have an effect on supply of some of these things. We'll have to wait and see. The news from Hong Kong hasn't been good. There's still terrible fighting in there, and that doesn't really mean anything. I saw an interesting program on the British BBC about facial recognition software that they use in China. Oh my gosh, folks, it's amazing what they can do. They had this reporter took his facial recognition, then he disappeared into Beijing. They found him within 20 minutes. They have something like 170 million little cameras looking everywhere. So Big Brother has arrived. So let's keep an eye on that too. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
The chart of the crude oil. We had 2 requests this morning, and I thought I'd talk about it. As you notice, it's had a very bearish bias here for the past several weeks. We've had that really nice 135 pattern where you see the lower highs. Each high is equal in time, and the price ratio comes in perfectly. We've now broken down below key support that was at 54 and change. We're trading about a buck under that, so we'll probably find some maybe around 52.50 to 5200 today in crude oil, but anything below 5,200 in crude oil would suggest a major ABCD is in vogue, and that would take it down to near those old lows at $45 a barrel. All this relates to that commodity thing, folks. I mean, these markets might be reacting to a deflationary environment, and that will not be good for stocks, I don't believe either. But hey, that's my 2 cents worth. I'm just a technician. I don't try to make a to say I know anything about the fundamentals that I don't. By the way, folks, I don't know if you know this or not, but I made national news on almost every single channel on this past weekend. I know that you remember that in 1969, Robert Kennedy was killed in the Ambassador Hotel in Los Angeles, and he was shot by Sirhan Bashara Sirhan, and the man who wrote that book, Kennedy Must Die, was named Robert Kaiser. Well, when I moved to Westlake Village a few years before that, I had bought Robert Kaiser's house. So I had that was long before he ever wrote the book. He was just a writer, an author, So, but I did have that experience. But I'm not involved with any conspiracies, as you can possibly imagine. Anyway, the fact that my daughter actually reminded me about it, because I had even forgotten about it. But when it came across the tape, he was stabbed, I guess, at the prison he's been in for the last 40-some years. But, oh boy, what a world. Okay, let's move on here. Anyway, the crude oil looks relatively bearish after that, the sell-off that we had from 56 and change the other day that we were talking about here. Let's take a look here at the natural gas, folks, because this is one where we had a really nice pattern here about 9 days ago when we made that really nice Gartley. You know, Gartleys work about 60% of the time, but when they line up perfectly and they gap up the next day, those are really nice. Now we've gotten up here to we're trading above the 232 area this morning. There should be some resistance up at 237. We're 5 days higher, so at that point I would think we'd probably be getting ready to see a little bit of a pullback here in natural gas to make that 135 pattern on the downside that we like to see. So let's watch it closely. It's going to be very, very interesting. That's going to be what I think is going to happen. So if you have any questions, and I certainly hope you do, 877-927-6648. I'll be happy to answer them for you. We do have a question from Ruby, and that's about sugar, the sweet. We want to get this up here because it's very, very important here that we hold this sugar. You notice that we made a 3 drive to a bottom pattern in September of last year. So that's, well, it was actually the September the 26th. Here we are on the 3rd of September, making the same type of a pattern down here around $11 a pound in sugar. So if 11 cents a pound in sugar. So if you'll watch that closely, once you get above the 1155 area, you would certainly think that you'd have a trend change at that point. And but it's very, very quiet. I mean, there seems to be a lot of support here at 11 cents a pound, but, you know, that can dissipate, you know, very, very quickly. Another one that looks really interesting is the coffee. You'll notice here, we'll bring this coffee up to take a look at it. And you'll see here that coffee has some pretty strong support at that 95 level and great support at 93 where we hit the 78% level and then had a nice little 5-cent rally. But it's trying to make some type of a bottom in here. But here again, that's that is an assumption. We don't know if this is the actual bottom or not, but nobody knows that. That's for sure. All right, one other question someone's had, and that is about the hold on 1 second here. Sorry, folks. This is about soybean oil. We've got a very interesting pattern here in soybean oil. It's going to be a little weak this morning, and it's going to be coming down to test this downtrend line at this. It's trading around 28.40 right now. So if it takes out last week's low at around 28.20 and doesn't go any lower than that, that would really be a bullish sign if it can turn from there. So at that particular point, you won't have to risk very much at all. So watch the soybean oil this morning. The grains are a little weaker. Whether it's based on the stronger dollar or not, I don't know. But that dollar is what? The VIX index, let's just take a look at the old VIX index for the old Marshallino, and we'll see what's going on here. 1 second, Marshall. It'll only take me a second to get this up. Maybe a little bit longer. Maybe not at all. There, we can do it. All right, here's the VIX. There's no fear in the market at all, folks. You can see from this that, let's get this chart up here, there's no fear in the market at all. I mean, we've had a couple of higher bottoms now since the 25th of July. We came down to the 61% retracement there on August the 20th, and we've been basically in this trading range between 25 and 16, but nobody is scared. Remember, the VIX stayed between 11 and 10 for months and months and months when you look at it on a long-term basis. So there's not any sign of fear coming in these markets. That's one of the reasons why it's so troubling. And if you look at the negativity, since we're talking about that, if you want to see a real bearish chart, folks, let me get it out here to let you take a look at it. And that is the banking index stock, the chart. That's the one that is really quite negative. Let's get that up here so we can see it, and you'll see this is extremely. You stop and think that we just rallied up to a 61% retracement in the S&P and the Dow Jones, and look at the banking index. It can't even make a 382 retracement. That is that's not a very good sign. Now the good part about this is the fact that it had really strong support at the 61% retracement there at 89. That you can see that it made it on 2 consecutive days, but the rally was well, maybe it rallies today, but that's a very, very negative. And the double top that we had at the 61% retracement from the high, this thing topped over a year ago. So those are, that's not why. This is where the money goes through. So pay attention to that. Tim Bost will be our will be our guest here at the half hour. Financial Cycles Weekly out of Sarasota, and we'll have some questions for him. I'm sure he's going to be talking to us about hurricanes and also, of course, the market and things. He's a well-known author and always is in the high rankings for the Timer Digest, which is good. We have several of those folks on here. We have Arch Crawford is there. We have Carrie Szymanski comes on. Bob Miner's in there. So, Barry Rosen, all those guys have been our guests here, and they're in the high rankings of the Timing Digest. So we'll see what's going on. Right now, the markets are getting ready to open. Looks like we're going to be about down a little bit in some of these things, a little more than others, but we'll pay attention. Silver just made a new high up here at 1896, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Tim Bost out of Sarasota, Florida, Financial Cycles Weekly on the line. Tim, are you there? Looks like technical difficulties have taken over once again. Well, we'll have him on soon enough. I hope it's not related to the hurricane, but he's on the western side of Florida, and the hurricane, of course, is on the western eastern side. He's on the western side. So hopefully he's going to be okay. In fact, he was doing all right when I spoke with him over the weekend. Let's move on to one of the things that I think is very important with silver making new highs in here. Gold isn't making new highs, but that's still, keep an eye at 11 o'clock, folks. Watch silver in an hour and a half just for little giggles to keep the old man occupied here with some fun. Let's take a quick look here at the, I want to show you the, give me 1 second here. This is the XAU because it has a very interesting pattern here. Let's get it up here, see where we are. That's not the one I wanted. Is Tim on the line now?
I'm here, Larry.
There we go. I got your first thing up, my friend. First of all, how are you holding up with all that rain you're having down there in Sarasota?
Actually, we're high and dry today. It's pretty amazing. We're on the west coast of Florida, on the Gulf of Mexico, and everything's hitting on the east coast. Yeah. So we're getting a few breezes so far, but not much to contend with, thank goodness.
Well, that's really good. I thought you would at least get some of that rain, but I guess it didn't get over that far.
Well, we may get some yet. I think they're predicting by late this afternoon we'll start to have some precipitation, but we'll see how it goes. We're feeling very fortunate that the storm has weakened, and we're far enough away from it here that we're feeling very little impact.
Yeah. Tim, how about that red tide that you had a few years ago? You know, we always go down there to Longboat Key and Sarasota, and they had that red tide a few years ago that was really, really devastating. Whatever happened? Did that all wash away, or?
Well, that has certainly dissipated somewhat. We've not had quite the extent of the problem that you experienced during your unfortunate visit a few years back, but it continues. The environmental situation in the Gulf of Mexico continues to be fairly precarious. We've got lots of factors that can upset the balance, but that's something we live with here.
Okay, let's talk about the stock market here. You've got the S&P 500, the ninth harmonic, and Mars and Saturn. Do you want to explain to folks what we're looking at here? This is really really an unusual. Is this the Fibonacci trader or Galactic Trader from GMO?
Yeah, this chart was generated with Fibonacci Galactic Trader software, so we are taking a look at it from that perspective here. And what we're looking at with this chart is basically daily price bars for the S&P, and we have added what we call planetary price lines. There is an exact price equivalent in the markets to the positions of the planets at any given period of time. And so what we do is calculate that and spread it out over the period of time that we're looking at on this chart. In this case, we've got the S&P back to the first of the year here approximately. So this is what's happened so far in 2019. And what we've observed here is that with the red lines, which are the positions of Mars, and the blue lines, which are the positions of Saturn, that these planetary positions do a pretty good job of defining support and resistance and indicating the trends for the S&P so far this year. And so that's what got us interested in that. When we talk about the ninth harmonic, what we are doing is projecting these planetary prices over various increments so that we can match the trading range of the markets. So we extrapolate from the actual positions of the planets and then add an additional dimension that way so that we can fine-tune our work with it. And so you may notice here the heavier red line going diagonally across the top of the chart defining some resistance. That's a first harmonic Mars line, and that heavier blue line defining some support there is the first harmonic Saturn line, and the other lighter lines are the harmonics of those.
Okay, now I have a question. When you mentioned Mars, you know, W.D. Gann spent a great deal of time, and a lot of his charts had markings of Mars and things like that. Is that the same type of work that you're working on?
Absolutely. In fact, this work has evolved based on W.D. Gann's work and his discovery of that correlation between planetary positions and prices in the markets. You look at some of Gann's charts, of course, he didn't have the advantage of working with computers. They were all hand-drawn, and he was projecting these planetary lines based on prices. And it's through studying his work that we've now been able to have tools like this one that can computerize the process, speed it up for us considerably.
Wow, it's amazing how they bounce off these red lines, though. There must be something there, that's for sure.
Yeah, that Mars energy is pretty dominant in the market pattern. So what's coming up here is that we have a particular angular relationship coming up next Monday on the 9th of September between Mars and Saturn. Based on our study here of these planetary dynamics that we've seen so far this year, defining support and resistance, we're curious about what's going to happen here. Now, there's a 120-degree angle based on our perspective here from the Earth between Mars and Saturn. That lineup will be occurring on Monday the 9th, and so we flagged that date as one to look at in particular. And you'll see that on our chart there. There's the crossing point of those two lines at that point. So what we've been able to do then is back test with the history of this particular alignment between Mars and Saturn. And we have found that essentially it doesn't provide a major pivot point in the markets, but begins to define a level of resistance. And you can see from our little chart there, we've done the back testing, and it shows 2 weeks before and after that alignment. And essentially what's happening is that we've got a pretty flat pattern occurring with prices in the S&P around that time. So we're looking for this point then on the 9th of September to begin to define some potential resistance with the markets. We are anticipating a mildly bullish month in September. We are looking for prices to trend upward, but it looks like that process may stall a bit as we get the month underway based on this configuration.
Wow, that's really interesting. Now, I want to bring up this last one here. This September 9th, it shows you the different trading ranges that you have lined up here to let the folks see. Now, how are these prices arrived, Tim? You're able to tell us that?
Right. What we've done is calculate that exact position between Mars and Saturn for that date. And then, again, what we're working with is a ninth harmonic projection here so that we get these price increments between them. And so what we've done based on the current trading range for the S&P is simply define what those accurate Mars-Saturn prices would be, the equivalents. Of course, the two higher prices there for potential resistance and the two lower prices for potential support for the S&P. Now, it's important to understand that when we use tools like this, we're not trying to forecast the market with this device alone. This is best used as a confirming factor if we're looking at Fibonacci retracements or other technical tools that indicate sensitive price zones, and we can use this to confirm that.
Good. Hey, Tim, stay with us for a little bit. We want to ask you about your training program that you have coming up.
Oh, sure thing.
Okay, you bet. Tim Bost, Financial Cycles Weekly, Sarasota, Florida. We'll be right back, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we're back with Tim Bost out of Sarasota, Florida, Financial Cycles Weekly. Tim, I'm sorry to mispronounce your name, but I've got this terrible allergy here. One of the trees out in front of the house is blooming, and it kills me.
No.
So, yeah, I'm okay now. But anyway,
at least you're not allergic to me, so we're good.
Oh, this is true. This is true. Be so kind as to tell the folks about this training seminar that you have coming up. Program.
We've got a new program that we have just released. We're still in the launch phase with this. It's called the Astro-trading Intensive, and it's exactly what the name implies. It's designed to get you up to speed very, very rapidly and efficiently in the basic skills of astro trading. Now, if you got some experience trading, you know a lot about how to handle the markets, but the astro trading approach adds some additional elements that can refine your trading results considerably. And with this program, we've designed it to provide a systematic step-by-step approach to give you all the basics of applying astrology to the markets to add this to the trading mix. And so we've got lots of tips and tricks along the way that we cover. We also talk about the biggest mistakes that you can make in astro trading, and obviously how to avoid those to get better results. We also put a lot of attention on the trader's mindset. What's the right attitude to take? And you've done a lot of great work in that area, Larry. So you've been a real inspiration for that part of this program.
Hey, tell us what's a major problem that people have when they do astro? They expect too much? That'd be my first guess.
Well, I would say that the fundamental problem is the notion that one size fits all. You know, what we did is to take a look a few minutes ago at this Mars-Saturn interaction, and this is pretty significant with the S&P. The temptation is then to take that same planetary configuration and try to apply it to gold or to Bitcoin or to IBM stock or whatever, and it doesn't necessarily hold up. So it's a very individualized approach, and that tends to be the biggest challenge. People, not that they expect too much, they expect it to be a magic bullet that can be applied indiscriminately to everything.
And how do the folks reach you about this? It's you've got http://bit.ly. Go ahead.
And it's AT50 now. AT50NOW, all caps. Following that bit.ly. That's an abbreviated thing. That'll take you to a page that'll help you request information and also give you a 50% discount on this program, as well as access to about $3,500 worth of bonuses that we're attaching to this program. So we want to provide incentives for people to learn this stuff. So that's what this is really all about.
Tim, what's the website that the folks can reach you?
financialcyclesweekly.com is the principal website. You'll find information there about some of our past trading performance and some of our membership programs, articles and videos and other things that you can access there to help you get your feet wet with the fascinating and very, very rewarding world of astro trading.
Hey, listen, my friend, thank you so much for joining us today. We'll have you on again soon. And take care down there with all that water and the hurricanes. Hope it misses you.
Thank you, Larry. I appreciate your attention and concern. Have a great day.
Okay, you bet. Tim Boss, Financial Cycles Weekly, folks. Okay, let's move on to, we were going to talk about, I wanted to talk about the XAU because it has a really interesting pattern here. Losing my voice just a little bit, folks. Let me get it up here so we can see it here. I posted the first one. This is the XAU on the long-term weekly here. You'll be able to see this. We are making a 78% retracement here. We made last couple weeks ago. Well, excuse me, last week. Then we had the hanging man chart candle pattern would probably be dissolved today if we get above that 103 level in the XAU. But what's interesting, I haven't had a chance to look at the XAU yet. I'm sure it's probably sharply higher because of the fact that silver is up, more than 40 cents, which is a really big move for silver in one day. Gold's up quite a bit too. But if we take a look here, this is one of the things that I was watching for this morning, is to see what was going to happen here with this. You'll notice that the XAU on the get this one on the short-term daily chart here had a really nice redrive to a pattern. Now, I don't know if that pattern has been smashed or not today, but I'm going to check on it right now. Get up here and take a quick look at it and see if we busted through it, because that would mean something quite significant. And we will see. Look, and well, it doesn't look like we did. Well, maybe we did. Hold on. No, we haven't even done that. No, we haven't. Let me look at this. No, we haven't even come close to that as of yet. The market's only been open 13 minutes, so that could be something very, very interesting. Also, the fact that it's not falling along with the silver. Platinum is very close to the 1.618 expansion up there at 956. We had a high today at 954.70, so that's one that looks a little bit interesting. But as I mentioned earlier, just for giggles, keep a close eye at 11 o'clock in silver, folks, just to see what the old see what happens at that time. The reason why 11 o'clock is important, folks, it's 5 minutes, 5 minutes after 10:55 and 5 minutes before 11:05. That's why it's so important. Boy, these cards and letters just keep popping in today. Boy, we got lots of questions. Let's move on to the next question that we have, and that's going back to looking at a commodity again. And if you'll give me 1 second here, it's going to be very, very interesting, because it's going to be on the, just a second here, hit the wrong toggle. Just give me 1 second, and then I'll have all this done here for us, hopefully. Here we go. We want to look at copper, the metal here, because it's starting to weaken up again here, and it looks like we're going to be heading down a little bit more here. We're breaking down below those. We haven't taken out the 249 level yet, but we're moving. We're going to talk about the little piggies for Ruby. Let's get these up here, these December hogs. We had a big move last week, but sold off a little bit on Friday, but they're going to be looking okay here as long as they can stay above that 61 level. We had a really nice double bottom butterfly pattern there. It's actually a butterfly, because it took out the lows of August the 5th by just a little bit. If it hadn't have done that, it would have been a double bottom Gartley, but because it took it out, that makes it a butterfly. We rallied from 59 up to 66, and now we're going to see what we're happening. Folks, all this stuff on the commodities is going to be related to what's happening to the CRB index, because if that thing fails, folks, we got big troubles. I mean, really big troubles. I mean, it's not going to be good, because that really means there's a lot of what we call deflation, and it's okay to be stagflation. Inflation is not that good if it's too bad, but 1% on either side is okay. Back in the old days of the 70s, we were looking at 13, 14% inflation. We don't see that now with zero interest rates, which is the biggest Ponzi scheme since Charles Ponzi brought it to Boston back in the 1920s. So Anybody that believes that, boy, I still have never met anybody that wants to give their money to let them use it. Let's take a quick look. Since that we're talking about that, what we're looking at here with the notes and bonds, and get this up here so we can take a look at it. Here's where we are in the Treasury notes on the monthly chart here. We're still up at that area of that 130. In fact, we're trading there right now. The bonds have not made a new high. Treasury notes actually closed on a new high, folks, dropping open interest dramatically, of course. But last week they did make a new high, and that was if you'll take a look at this, if you like ABCD patterns, you might want to watch this one. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we got the market still down a little bit, but bouncing back. That's a good sign. Anyway, someone's asked a question about Hong Kong. Lots of problems over there. They'll get them worked out. I'm sure they are. They're pretty smart people, and they're very industrious, so I'm sure they'll watch it. Main thing today is watch the close today in the platinum and in the silver and the gold. If they happen to close down, I know that seems like a far stretch of the imagination, but with this dropping open interest that we've seen in these metals over the past few days and weeks, this is not a bullish sign, even though they've made new highs in platinum and in silver. Gold's still, $12, $13 away, but open interest does mean something, folks. It always has, because it's a sum total of all the buyers and sellers. There has to be a buyer for every seller, and when the buying comes in and prices go down, that means short covering, and that means that you're looking at something that could be potentially quite negative. So just keep in mind that's what we're watching as we look at some of these things here this morning. Let's move on to just a little bit here. I wanted to just alert you a little bit about some of the research that we did the last couple of months that's going to be coming out hopefully in a what we call let's get it up here. I want to show you this. This is the this is a distribution of prices and how they move around the. Hold on one second here. Doggone it. This is the E-mini, and this is based on the UK time, which is a USA Open, and it shows what the average usual standard deviation is. Now, what that means is, you'll notice that you have 14 on the green line. That's the first standard deviation, and you have the second one at 17 and the third one at 20, and basically watch to see what that standard deviation is. So take for example, could I post the link? I think that they can do that here at TFNN. I could possibly do it. Just a second here. I should do that. Be able to do that for yes, I can do that. I can copy and paste. But hopefully, I'm probably not going to be able to get this into the. Anyway, thanks, folks. I'll see you all tomorrow. Our guest tomorrow, Bill Meridian. You don't want to miss it. It's got some great stuff.